Everybody's still asleep. Yeah, long night. Well, my name is Barry Wood. I'm the Assessment Division Director for the Department of Local Government Finance. I interact with the auditors on occasion. Typically, it's with the assessors, county commissioners, county council, but occasionally I'll get calls from the auditors about abatements or, hey, why did my assessor do this, or is this right? A lot of those things. So we have a lot of information to cover. Let me make sure I'm modern technology. The arrow, and I hit the arrow, and the arrow didn't work. Let's try it again. Yeah, that's not. There we go. I just had to get up and get me going. So I have a lot of information to cover today. We'll talk about the role of the assessor, the assessment timeline, cyclical reassessment, annual adjustments, ratio studies, appeals in the PDBOA, abatements, and then pop-in. And pop-in is not a type of popcorn, just so you know. So what is the role of the assessor? As you can see statutorily, basically the assessor, the county assessor, is responsible for the countywide assessments, equalization, certifying the gross assessments to you as the county auditors, discovery of omitted property. And there are still 13 township assessors left in the state of Indiana. Back in 2008, the General Assembly passed legislation, in essence, doing away with the township assessors. There was a referenda in 2008 for 43 township assessors, whether or not those assessing duties should be transferred to the county assessor. And of those 43, 13 survived, so to speak, were responsible for the assessing duties. If you look at a map of the state, the 13 township assessors are north of I-70, in 7 counties north of I-70. So there are still 13 township assessors that I work with. So it's either the assessing duties are done by the township assessor or the county assessor. So basically, as you can see, the duties of the township assessors were transferred to the county assessor. So who does the county assessor work with, or the township assessor? One is with the county auditors, the county treasurers, commissioners, council, county attorney, the Dlgf, LSA, and then members of the General Assembly. But they also work with the Indiana Board of Tax Review, other offices in the county like the recorder, surveyor, building and zoning departments, towns, mayors, clerks, treasurers, other elected officials. So what is the assessment timeline? Basically, it follows a calendar basis, and I'll get into, it's hard to see on this one, but basically January through December, there are certain statutory timelines that the assessor must meet and work with. For me, it's easier just to put it in a bullet point format. So January 1st is the assessment date every year. February 1st, the assessor submits their sales disclosures to our office. March 1st, the assessor submits their sales ratio study to us, and I'll talk in detail a little bit about the ratio study. By April 30th, the assessors send out their notices of assessment, the Form 11s. May 1st is when the cyclical reassessment starts. May 15th is when the business personal property returns are filed with the assessor's office. By June 15th, the property tax assessment appeal date is due for those counties that send out their notices by May 1st, April 30th. July 1st, the assessor rolls and balances the values with your office, so hopefully you work well with your auditor, with your assessor's office in terms of the assessor rolling and balancing their values with your office by July 1st. By July 31st, this cyclical reassessment, at least 1/3 of the properties must be assessed by that date. August 1st, hopefully all the auditors in the state of Indiana roll and balance their values with the DLGF. October 31st is the last day for the PTBOA to make changes to personal property audits or returns, and that's also the deadline for the 2/3 of the properties in the cyclical reassessment to be completed. And then by December 31st, 100% of the properties for the current cyclical reassessment must be completed. So what is cyclical reassessment? The state of Indiana used to do assessments every 10 years. And over the course of a few decades, that got changed. The legislature said we need to do this more frequently because 10-year gap there would be huge increases or spikes in assessments and in ultimate tax bills. So the General Assembly said we're going to change this and we're going to switch to a cyclical reassessment whereby approximately 25% of the properties are reassessed during a 4-year period. The assessor is responsible for submitting a cyclical reassessment plan to our office. We are currently in year 4 of the 4-year cyclical reassessment, so the next cycle will start in 2022 through 2026. But basically, the cyclical reassessment is the assessor going out and verifying the underlying parcel characteristics of the property. Did a person add a new pole barn or a detached garage, or did they tear down something, or did they put a deck on their property? Just making sure that the property characteristics are as up to date and accurate as possible. So basically you can see the mission of reassessment is to inventory, verify, and value all the real estate parcels. It could include land, reassessing land, the buildings and fixtures, appurtenances, and then an estate in land or an estate right or privilege in mines located on the land. So real property assessed where it's located. So we're here in Indianapolis, Keystone at the Crossing, the Sheraton Hotel. The hotel would be assessed here versus a hotel in downtown Indianapolis or a hotel in Maryville. Wherever the property is located is where it's assessable. Who's responsible for it? Generally, you can see the person that's responsible is the owner of the property, but there may be situations where it's leased to somebody or you have an ownership change, whatever the case may be, but it's typically going to be the person responsible, the owner of that property. So who's responsible for assessing the property? We're here in Washington Township, Marion County. The Marion County Assessor's Office would be responsible for assessing this property. The DLGF does not assess the property per se. We are responsible for assessing large industrial facilities up in northwest Indiana, the BP Amoco refinery, Cleveland Cliffs steel mill, U.S. Steel steel mill, and also we do state distributable and railroad and rail car properties. But the assessing official is responsible for that property in their jurisdiction, be it a township assessor or the township assessor working with the county assessor. They make sure their records are accurate and up to date, and they show the assessed values in accordance with our rules. You may have heard the term annual adjustments or trending. So what is annual adjustment or trending? Well, basically in 2002, when we moved to the market value and use system, as a result of the Town of St. John case, changing how we assess property, coinciding with the cyclical reassessment is to do annual adjustments or trending whereby the assessors are taking sales of properties from the prior calendar year, comparing it to the assessed values and determining do we need to make a change to the assessed values. The changes can be positive, the changes can be negative, property values could stay the same. And if you've been watching the real estate market the past 12 to 18 months or so, the real estate market has really taken off, and probably a lot of taxpayers are going to see changes in their assessed value to reflect what's going on in the marketplace. As I mentioned earlier, January 1st is the assessment date, and each year stands alone. So the assessor takes the sales of the properties, comparable properties, to estimate the values for those properties. So how is your property assessed? If you go back to your home and you say, how did the assessor assess my property? The first thing is to make sure that all the parcel characteristics, if you talk about residential now, all the parcel characteristics of your house are correct. If you live in a 2,000 square foot ranch home with a detached garage, is that's what reflected on your property record card? If you live on a quarter acre of land, is that land assessed correctly? The assessor will then take those properties and define neighborhoods. Typically, if you think a neighborhood is, say, a subdivision, where, say, 100 home subdivision, all the houses were built by the same builder in a 2-year period, that's a neighborhood. But in some rural areas, a neighborhood could be an entire township. It just depends. The neighborhood delineation is determined by the assessor. So basically what happens, the assessor takes the sales, they look at the age, grade, and they say, are these properties that have sold, are they comparable? And there's a lot of subjectivity to that. Most people think, yeah, my house is comparable to this house, but is a 2-story house comparable to a 1-story house? Some people would say yes, some people would say no. They both provide living arrangements for people, but what's motivating somebody to buy a 2-story house versus a 1-story house? So what role does the Dlgf play in all the assessment process? Well, we provide guidance, rules and regulations, memos. I think part of my job description is to write as many memos as possible. It's not performance-based, but I think memos are a key thing. A lot of what we do is predicated on what the General Assembly does. If the General Assembly passes legislation, then we either have to write a rule in response to that or provide guidance or interpretation of that legislation to the assessors. The assessors submit a ratio study to us, and what we do, we review and approve that ratio study to make sure the assessments are as fair and accurate and as equitable as possible. However, this is done more on a 30,000-foot view level versus, say, a 30-foot view level. So what about taxpayers? How do they know how much their property is worth? So if you were to come up and say, how much do you think your house would sell for? How would you know? Maybe you had an appraisal done. Maybe your next door neighbor sold their property. Maybe you had to refinance. Maybe you just bought your property. Most taxpayers have a pretty good idea as far as what their assessment or their property's worth. Some may think it's worth more. Some may think it's worth less, but most people have a pretty good idea of what they think their property would sell for. So what happens if a taxpayer doesn't agree with what their assessment is? Not their taxes, and we'll talk about that in a little bit, but what their assessment is. Well, the assessor will send a notice of assessment, a Form 11, and then they'll file an appeal. If they don't receive a Form 11 from the assessor, and there are some assessors that have made, it's a statutory requirement that the assessors shall send out their notices of assessment, but some have made a conscientious decision not to. So if a taxpayer does not receive a notice of assessment, then the tax statement, the TS1, would serve as their notice of assessment, and they would have the opportunity to appeal from there. We'll talk about appeal deadlines in a little bit. So taxpayer disagrees with their assessment, they file their appeal with the assessor, and we go from there. As I mentioned, how much would your house be assessed for? What do you think it's worth? Well, what would a willing buyer and seller agree to in terms of the assessment based on that time frame? As I mentioned a few minutes ago, the real estate market generally throughout the state has been pretty hot, and so assessments are going up, but it would reflect what a property would sell for as of that date. So what's a ratio study? So as part of the annual adjustment process, the counties submit to us by March 1st. It's a statutory deadline to submit to our office a ratio study. And the ratio study is basically a comparison of the assessed values and the sale prices. And in Indiana, the assessment ratio for all properties in Indiana is to be approximately 100%. And what we're looking at is the accuracy of the assessments. How close are they to what is going on with the market value for the properties? It's not an exactitude, so if you bought your property for $100,000, it does not mean your assessment's going to be exactly $100,000. It may be $95,000, maybe $102,000, but it doesn't necessarily mean it's going to be exactly $100,000. I won't bore you with a lot of statistical information, but there are a couple things we look at. One is the coefficient of dispersion, and this is basically how uniform are the assessments within a class of property in a geographic area. So in other words, how accurate are the assessments and uniform are the assessments for residential property in a township, or how uniform are the assessments for commercial property in a township or area, or industrial properties. So we look at accuracy, we look at equity to try and ensure as much as possible that the assessments are correct and accurate. We also look to see how are properties being assessed if you have higher end properties compared to lower end properties. And well, what's a higher end property? What's a lower end property? Typically, you would think of a lower end property maybe being $75,000, $80,000, $90,000, and a higher end valued property like a McMansion being $500,000. Or so. How are those assessments assessed? Are they comparable in terms of, obviously they're not comparing a huge house to a small house, but are those properties in those property classes being assessed fairly and uniformly and accurately? So if you were to look at a ratio study, I mentioned it's the assessed value divided by the sales price. So in the first example, the assessed value is $100,000 and it's sold for $150,000. Well, in this case, the property is underassessed. And so chances are the assessor would probably in the next assessment, annual adjustment process, try and adjust that assessed value closer to that sale price. In the second example, you can see the $100,000 is the assessed value. It's sold for $80,000. So in this case, the assessment is overassessed. So chances are the assessor would probably try and bring that assessment down a little bit closer to that sale price. One of the things we do in our ratio study review is we create a pivot table. And a pivot table basically looks at the different classes of property, commercial improved, vacant land, industrial, and residential. And then we break it down and see what were the changes going on in those property classes. And as part of the ratio study process, if any class of property changes more than, in a township changes by more than 10% in that jurisdiction, we will ask the assessor, why did that property go up more than 10% or why did it go down more than 10%? In some cases, it may be there's new construction. You had a new factory built or a new office building built or a new subdivision came in. In other cases, it may be that the market value has just gone bonkers and the assessed values need to keep up with what's going on in the marketplace. So in this situation with Boone County, you can see that in terms of the changes, that there are a lot of properties in residential that I'm looking at now that had between a 0 and 10% increase. Might have been 1%, 2%, 3%, 9%, but you can see that we're able to identify and watch and see what are trends going on in the marketplace. So each county has what's called a Property Tax Assessment Board of Appeals, or PTABOA, and the Indiana code allows the county commissioners to determine if the county has a 3-member board or a 5-member board, and it's a local control decision. The General Assembly also authorized counties, if they wanted to enter into a multiple county PDBO arrangement. So far, no counties have entered into that arrangement, but an example may be the southeast part of the state. Say Switzerland and Ohio counties decided, hey, we could have our 2 counties could join forces and we could have a multiple county PDBO. That is permissible, but like I said, there have been no counties that have entered into an agreement. So who serves on the PDBO? Well, the only criteria, we'll get into age and everything, but the only criteria for a PDBO member is somebody that's knowledgeable in evaluation of property. Well, how do you measure whether or not somebody is knowledgeable in the evaluation of property? Pretty tough to do. Most counties will have maybe a realtor on their PDBO or maybe an appraiser, somebody that's pretty well versed in the real estate market, but that's the only criteria, is that they're knowledgeable in the valuation of property. So in terms of a 5-member board, excuse me, the commissioners appoint 3 members. The county council appoints 2 members. We, the Dlgf, we have a designation level 1, level 2, level 3, assessor appraiser designation, certification program, and so at least one of the members must be a level 2 or 3. However, the fiscal body and or the commissioners may waive that requirement. Another key thing is at least 3 of the 5 members may be of the same political party, and 3 of the 5 residents of the county. So there may be some situations where county PDBO has members from other counties serving on their PDBO, easy to say 5 times fast. And you think, well, why would we want somebody from another county serving on our PDBO? Could be that trying to find people to serve is difficult. It could be that, hey, maybe I'll go back to Switzerland and Ohio counties. Maybe we have an appraiser from Ohio County that's willing to serve on the Switzerland County board, and he or she is familiar with the jurisdiction. Ohio and Switzerland counties are comparable, similar, so maybe it makes sense to have somebody from another county serve on our PDBO. If your county has a 3-member board, and I have not done an analysis, but I would say probably half the counties have a 5-member board and half the counties have a 3-member board. There are certainly advantages to both. If you have a 3-member board, easier and able to keep and retain members of the board. You don't have to worry so much as far as trying to fill vacancies. A 5-member board, maybe it's better, especially in a larger jurisdiction, to have more representation. Maybe you have an appraiser with construction or commercial background, and maybe you have a residential realtor on your board. So pluses and minuses to each. But if you have a 3-member board, the county council appoints 1 member, the commissioners appoint 2, and then they may waive the requirement for the level 1, level 2 level 3 requirements. So compensation are local control issues. The board members receive compensation. The county council fixes the rate of compensation. The assessor basically keeps an attendance record. The assessor is a non-voting member of the board. I know in some situations the county assessor said, hey, I want to be a voting member of the board, and that's not permissible. They serve as a secretary. They provide information and background information about the assessments, the appeals, but they are a non-voting member of the board. The board shall meet at least once a year. I know in some counties the board maybe meets on a monthly basis, but at least the PDBO must meet at least once each year. The assessor also has an appeal tracking process. They must submit a report to us each year by April 1st showing what the appeal activity was for the prior calendar year. How many appeals were filed, how many were dealt with, how many were still active or open-ended, how many were appealed to the Indiana Board of Tax Review. So if you did file an appeal, the assessor would schedule a preliminary hearing to meet with the taxpayer to try and resolve as many issues as possible. They would submit or exchange their information. If for whatever reason the assessor or the taxpayer had information after the preliminary hearing, they must provide that information before the hearing before the PDBOA. The PDBOA has 180 days to act on the appeal. So if you filed an appeal by June 15th, the PDBOA, the county, must address your appeal within 180 days. If for whatever reason they did not address that appeal within the 180-day time frame, the taxpayer would have the right to appeal directly to the Indiana Board of Tax Review. The PDBOA must give 30 days notice to the taxpayer, and then a taxpayer could request a continuance at least 10 days in advance. They may also withdraw their appeal at least 10 days in advance. If the taxpayer does withdraw their appeal, they do waive the right to appeal to the Indiana Board of Tax Review. So who can file an appeal? Basically, it's the owner of record as of January 1st. However, in some situations, property sells after January 1st, and if the new owner is responsible for the taxes, they can file an appeal, even though they may not have owned it as of January 1st. In some cases, a taxpayer will file an appeal late. And the question is, well, should the taxpayer still be allowed to continue on with their appeal? Everybody wants to have their day in court, so yeah, you could let that taxpayer continue with the understanding that they're not going to be successful. Sometimes a taxpayer will file an appeal, and can their assessment go up? The answer is yes, because when you file an appeal, you're putting everything is open to review. So there is a possibility that the assessment could go up as a result of an appeal. There is a 3-year time frame for the assessors to change the assessment, and if I were an assessor, I would want to have a pretty good idea, be able to defend why that assessment increased. Maybe it's in a rural area and your county does not have a building permit system. The taxpayer appealed, you go out to the property and you find out that they've added an addition to the property and you didn't know about it. So that may be a reason why the property increased in value. So starting in 2019, the assessors must send out the notices of assessment by April 30th or before May 1st each year. If an assessor sends out their notices of assessment by April 30th each year, a taxpayer has until June 15th of that year to file an appeal. So January 1st, 2021 is the assessment date. Assessor sends out the assessment notices by April 30th, 2021. A taxpayer has until June 15th, 2021 to file an appeal. If the assessor does not send out the notices of assessment by April 30th, say they send it out May 1st or May 2nd, or they opt not to send out notices of assessment, that January 1st, 2021 assessment date for those taxpayers, they would have until June 15th of 2022 to file an appeal. So a full year later, so the incentive is on the assessor to send out the notices of assessment. That plays into what you do as auditors, certainly, in terms of when you certify your net assessed values to us and if you ask for additional withholding, because you may not know until after the tax bills have been sent out the following year and the first installment is collected by May 10th, that somebody could come in after that May 10th, 2022 deadline and file an appeal going back to the 2021 assessment date. So The incentive, like I said, is to file or send out the notices of assessment by April 30th each year for the June 15th of that assessment, or for the appeal process. Abatements. So the auditors do get involved in abatements. Some of you may cringe and say, why did I get thrown into this? How come I'm doing this? So they're basically real property assessment, or real property abatements, and personal property abatements. And this is done by the designating body, and the designating body may be a county council, designating body may be a town council, a city council, but it's done locally. We in Indianapolis are not involved in the abatement process other than trying to provide guidance to the local officials. So it's done in what's called an ERA, an Economic Revitalization Area. And as you can see, the definition is, and basically it's within the corporate limits of whatever jurisdiction it is, and it's for properties or an area that has become undesirable for or impossible of normal development and occupancy. It's basically a legal description. It could be an entire township, it could be an entire city, but typically it's going to be more defined than that. It's going to be a more specified area. The abatement does continue. You could have a change in ownership, and it does continue as long as that new owner is in compliance with the standards of that abatement. So a designating body can say, yeah, we want to have this part of town to be an ERA, or a developer could come in and say, hey, I want to bring in a new factory or a new development, and I want this area. And so they work with the designating body to determine what the ERA is. If the designating body works on their own, the taxpayer, the person filing the abatement, does not need to submit prior to the project beginning what's called a statement of benefits. But if they do ask for, if it's done on their own volition, then they would need to submit a statement of benefits. So basically what the statement of benefits does is it says, here's how much the project's going to cost, here are the benefits for it in terms of the jobs created or the investment, Gesundheit. They could also, in terms of having multiple projects going on. So you may have, I'll go down to the southwest part of the state, go down to Princeton, and where the Highlanders are built at the Toyota factory. And you could have multiple abatements, one for personal property or one for real property, or maybe Toyota says we're going to invest and put new machinery in, so they could have multiple projects going on at the same time. As you can see, the reason it's important is it determines what are the benefits of having this abatement. Because if you have an abatement, that means the taxpayer is not going to be paying their full share, and the other taxpayers in that jurisdiction are going to have to make up the difference for that amount. Most abatements are going to be 10 years or less. It could be 1 year, 3 years, 5 years, but the legislature did provide that you could have upwards of 20 years for an abatement. The key provision here is if you do have something that's over 10 years, that the taxpayer must meet, or there must be an annual meeting after the 10th year to make sure everything is going accordingly. A designating body may impose a filing fee for the abatement, and they may also have some sort of annual fee in exchange for the abatement. Typically, it's not going to be more than 15% of the savings, tax savings. Some properties are not eligible for an abatement. As you can see the list: golf courses, country clubs, massage parlors, any facility that is retail food and beverage. unless that facility is in an economic development target area. Residential facilities, there are some provisions that allow residential facilities to get an abatement, but you can see there are some caveats to that, some provisions in terms of lower income individuals. Person that does obtain a deduction must attach it if it's personal property with their personal property forms, or if it's the assessor sending out a notice of assessment. And it's filed, you can see, between January 1st and May 15th. So here's where the county auditor comes into play. The county auditor shall maintain real property abatement records, and the assessing officials are responsible for the personal property records. There could be a waiver if, for whatever reason, the taxpayer did not file their personal property return timely. The designating body could give a waiver from non-compliance. The main difference between personal property and real property is abatements. Personal property, it's a self-assessment process whereby as they file their returns with the assessor. The real property is done by the assessor working in conjunction with the auditor. We would suggest the auditors working with your assessors keep a copy of the property record card on an annual basis, primarily because each year the assessment for that real property can change. Doesn't necessarily mean it will change, but if you have a record of that, you're able to keep track of how much of that abatement was for on this assessed value this year and how much was it for the following year. So it might be a good idea to keep a hard copy just for your records. Talked about the different number of abatements possible. You as the auditor are responsible for filing. I'll get questions at the end. So, okay, go ahead. Sorry, go ahead. Fire away. Okay, so the question is, could I clarify about the fees for the abatement? So there's no requirement that the designating body have a fee. Some counties have just said, hey, we want to have fees to make sure that the taxpayer, the person, the developer has skin in the game, so to speak, that they are invested in the process. You can see the Indiana Code citation, it says it's maybe a one-time fee. If the designating body says, you know what, we want to have a fee to help offset the loss of tax revenue, they can say, okay, we're going to have a $2,000 a year fee or $5,000, depending on the magnitude. So it's up to the local officials if they want to have a fee and how much that fee would be. The only restriction is you can see that it's not to exceed 15% of the tax savings for that abatement. So it's local control. If I were to do a show of hands, probably if I were to ask how many people know of a fee being charged in your county, probably half the hands would go up saying, yes, we have it. And if I said how many don't, the other half would go up. So it's a local control issue. So does that help answer the question? Okay. Okay, so you as the auditor, you're responsible for filing through Gateway with our office a legal notification in terms of all the abatements in your jurisdiction for the prior year. We send out, typically around this time of year, we'll send out a notice to the auditors, a memo saying, hey, please don't forget to file your abatement publication with us by December 31st. So this is where you'd want to work with your assessor to find out what abatements did we have during the prior year, or work with your designating bodies. So if you have any questions, we have all of our memos and gateway and information in terms of what you file, but that is one responsibility of the auditors in regard to the abatements. Pop-in. So what is pop-in? So pop-in is something, I'm to blame for it. A few years ago, Governor Holcomb challenged all the mid-level, upper management level employees in the state and their state agencies to think outside the box and come up with ideas. How can we improve the state? How can we make things better for taxpayers, for residents, for businesses? And I propose that we have an online filing system for personal property. So our idea was approved by the governor. We went through to the legislature, got funding. So basically, starting this year was the first year, it allows taxpayers to go online and file their personal property returns. They can't. Thank you. Not all forms are able to be filed. This was the first year, and certainly in the development process, we wanted to make it as broad-based as possible for the majority of taxpayers. A lot of taxpayers have more complex returns, but we wanted to be able to reach as many people as possible. So you can see the various forms that we allow to be filed through Pop-In. Taxpayers can upload additional personal property forms and any supporting documentation. It's done through Access Indiana, but each taxpayer and authorized agent has their own account. And so far, I think the results for first time out of the box, something totally brand new, has been pretty well received. We had an initial goal of 9,000 returns to be filed via Pop-In. Just to give you a basis of comparison, there are about 300,000 returns filed annually, personal property returns filed annually in the state. So we thought, okay, 9,000 is a pretty reasonable estimate. Well, we have had over 16,500 returns filed so far. Returns were filed in all 92 counties. We sent out a survey to those that filed, and approximately 74% responded they were satisfied, and 75% said they would use it again next year. One of the key things about Pop-In is not only is it online 24/7 and given COVID, making it easier for taxpayers and the assessors. Basically, the taxpayers are doing a lot of the work the assessors would normally do in regard to data entering the information. But Gesundheit, one of the key things about it is that there's no filing fee. We were certain the first year, we want to attract as many people to file, so there's no filing fee. Going forward next year, certainly there will not be a filing fee, and especially for taxpayers, the General Assembly changed the exemption limit for personal property from $40,000. Starting next year will be $80,000. And so if I'm a taxpayer and I'm not going to be paying anything in taxes, why would I pay to file my forms when I could just print them off and send it to the assessor? So we're quite adamant that we will not have a filing fee for Pop-In next year. Going forward, we may, after that, because it has to be self-sustaining, but our goal is to try and get as many taxpayers filing online as possible, especially given technology. And if you think of filing your income tax return with the IRS or with the Department of Revenue, we just want to make it as easy and as beneficial as possible for the taxpayers and CPAs, agents filing on their behalf. And there's my contact information. I have a few more minutes left for questions. So Oprah over here will go around the room and
little confused about can you explain the interfacing? I hope this isn't too complicated of a question. How does the 25% a year, is this a quadrennial reassessment then?
Okay.
25% a year?
Yeah.
How does that, let me ask the question, how does that interface with trending, and how does that interface with a sale of a property for 150 that's assessed for 100? Does, on an ad hoc basis, the assessor say, oh, that property needs to be looked at by itself?
Yeah.
What's the interfacing between the three of those? Is that question clear?
Yeah. So basically, all property is assessable each year, obviously, and all property is subject to the annual adjustment or trending process each year. So 4-year cyclical reassessment, and so if we're in year 4, so if you own a property and your part of the reassessment plan is for your property to be reassessed this year, the assessor is going to come out, hopefully look at your property and say, okay, we have you for an 1,800 square foot home with a detached garage, and you're on a quarter of an acre. So the cyclical reassessment is just making sure that the parcel characteristics are as accurate and as up to date as possible. The assessor then would look at sales in your neighborhood and say, okay, sales show that properties are going up 10%, 20%, going down 5%, whatever the case may be. So they can coincide. Possible they don't coincide. It just depends on the marketplace. So they do interface, they do interact, but everybody gets scared when they hear the term reassessment. And reassessment is just basically making sure that everything is accurate as possible as far as the physical characteristics. Then we get into the annual adjustment process and looking at trending in the sales to say what's going on in the marketplace. So a taxpayer could conceivably have their property reassessed and have annual adjustments, and they see a significant increase in their assessed value based on, oh, the assessor picked up a pole barn and now trending shows that the values go up. If the values go up by more than 5% from one year to the next, a taxpayer still would need to file an appeal, but the assessor would have the initial burden of proof in the appeal process for anything that goes up above 5%. So hopefully that answers your question. So the assessor must go out within 60 days of a sales disclosure form being filed to verify the parcel characteristics. So it could be, when they go out and they say, oh, this property sold and we didn't know they had this pole barn. They didn't tell us they tore down their detached garage. So that sale could generate changes to not only that specific property, but then hopefully the assessor is looking at all the surrounding properties to see, hey, did anybody else add a detached garage or a pole barn?